Latest numbers are now raising new fears in the housing market this morning. A new report finds home sales fell 3% in the first quarter of this year. That hasn't happened since the height of the recession 3 years ago. So understandably, people a little bit jittery this morning. CBS News business and economics correspondent Rebecca Jarvis joining us now to tell us what it means not only for homeowners, but potential homeowners and, frankly, the overall health of the economy. So as we look at this and as we look at these new numbers and that dip, there had been warnings of a double dip in the housing market. It seems to be a reality. What does it really mean?
It seems to be a reality, and what we are seeing here are average prices in this country falling 8.2% in the first quarter of this year versus last year to $169,600. We expect that they will continue to drop throughout the rest of this year. Zillow is reporting could be up to 8% of a decline for the rest of the year, and that they won't bottom until 2012. One of the most significant parts of this report, and one of the things that's most significant for prices going forward, is that 28.4% of American families are underwater on their mortgage, which means they owe more on their mortgage than the value of their home. That's a significant downside for prices, because for people to continue paying mortgages that are actually more than the value of their homes is a very hard sell. And in this country, we've already seen people walking away from their mortgage. We've seen layoffs. We've seen a huge disruption in terms of what's happening in the overall housing market. And that's what many people anticipate we'll see going forward.
Boy, that is somewhat of a depressing number. 28.4%. How does the market then recover? Is it just a matter, pardon me, is it just a matter of time?
Well, this is the issue, because the government has tried to step in and boost the market with $22 billion between 2008 and 2010 of tax credits for home buyers. That only panned out for a short period of time. It gave a very temporary lift to the market. So what we're seeing now is this fact that basically we have to work ourselves our way through this problem. Americans have to get back to work. With unemployment of 9%, it's very hard to make that sell of go out and buy a home. And there's still uncertainty in the job market. On top of that, there are so many foreclosures in the housing market that continues to drag down the price. So many analysts are saying, really, these other components of the economy have to recover in order for housing to come along with it.
Everything is so connected, especially in that, excuse me, in the picture that you paint. The housing crash was also cited as a major factor in the 2008 stock market crash. So as we're seeing a double dip in the housing market, does this mean that we are in fact going to see another recession?
This is what's very interesting, because if you take a look at the stock market right now, we've basically recovered. As far as stocks are considered, we've recovered all of those losses. The issue going forward for many economists is going to be jobs as well as the housing market. So it's not one single thing alone, but it's a multitude of things, from the jobs market to the housing market, that really all have to come back in order for them to come back together and the economy to improve.
Real quickly, if you can, 15 seconds or so. The one positive could be for buyers, first-time buyers maybe.
Yes, absolutely. What you see are home retailers coming out and actually giving people money to buy the homes, like KLM Homes, for example, in Illinois, which is offering money for home buyers.
So there you go. There's our silver lining. Rebecca, thanks.